This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. But anyway, we have a very important show for you today. Very, very, very important. Because as you know, or some those who have followed Rich Dad and the Rich Dad Radio Show and all this, in 1971, the U.S. dollar became debt. And so that's why anybody saving money is the biggest loser going today. And still we have people talking about financial literacy and saving money. Whereas you follow the Rich Dad philosophy is we use debt. And after the banking crash of 2008 is that our partner Ken McElroy, Kim and I and a bunch of other people, we borrowed hundreds of millions of dollars because interest rates came down to near zero and went below zero in certain countries. So we love debt here at the Rich Dad Company. Unfortunately, for those without financial education or without a substantial financial statement, they cannot participate in debt. So today's program is very important because for those of you who missed out on that last episode, there's a new boom coming along in banking. And the question today is the banking system we know obsolete? Is it toast? Is your neighborhood banker gone? You know, who wants to own an empty bank building, which there are going to be a lot of. So we're talking about the future of banking. So please keep an open mind. Most importantly, for those of you who listen from all over the world, for those of you who are in so-called third world countries, this may be the biggest opportunity of your lifetime because the U.S. will be slow to change simply because we're so entrenched in banking. But if you come from a country where there is very little banking, you might be the next leaders of the world. It's just like when cell phones went to China, cell phones proliferated because you didn't need to put landlines in. Well, it's a change that big. So there's going to be a boom of entrepreneurship, boom of money floating around the world, but it may be not going through your local bank. In fact, your local banker may be looking for a job. Maybe your banker should be listening to the Rich Dad radio program. So, Kim, what you want to say?
Well, this is exciting because, you know, at Rich Dad, we often look into the future. You know, what's coming down the road economically, what's coming down the road retail, what's coming down the road financially. Education-wise. And today, we've never talked about the future of banking. And we've got the expert with us today who is the expert on financial markets and a thing called FinTech, financial technology. So this is going to be exciting because we're all going to learn at the same time.
And also, as our part of the Rich Dad team right now is Ken McElroy. As you know, he is the author of real estate. He's my expert on that. Kim and I invest hundreds of millions of dollars with him using debt. But Ken is also sliding into FinTech or financial technology. So it's going to be a very interesting program, especially for those of you who are looking into the future. For those of you who missed the last crash of 2008, you might have a better opportunity coming down the line. So, Kenny, what do you want to say?
Well, thanks, Robert. I'm excited to hear from Chris Skinner because I watched some of his YouTube stuff and read up on what he's doing, and of course, as you know, I'm invested in some of this too. So
we are.
Yeah, we are. That's right. This is a very, very exciting topic. We borrow millions, hundreds of millions of dollars, and I've watched I'm looking at these corners because these banks, they're going to be gone. They're going to be prime.
There's going to be prime real estate.
Prime real estate corners around the country. There are, and everything's going digital, just like the record store or the travel agent. And so this is just, or the airlines. It's just one more thing.
So our guest today is Chris Skinner. He is the author of Value Web and his other book, Digital Bank: Strategies to Launch or Become a Digital Bank. In other words, can you become your own banker? And we've all heard of PayPal and what's that other one, Bitcoin and all this stuff. So that's why for those of you who are into the future of money and banking, this is your program. Welcome to the program, Chris.
Hey, thanks, Robert, and hi, Ken and Kim.
Hi.
Hey, Chris. Thanks for joining us today. You're in London, correct?
Yeah, a little bit cold and muggy here, but there we go.
You got to come visit. So Chris, let's start. What is FinTech?
Well, I've worked my whole life in technology in the banking markets with companies like IBM and NCR. But what's been happening recently is that thanks to the internet and mobile and the easy way in which it's capable of deploying services, a whole raft of new companies have begun creating very specialist financial service pieces that are based on internet-based technologies. And that's really what we mean by FinTech, financial technology that's internet-based. And a good example is companies like Square, who you may be familiar with, and they allow you to take a payment on a tablet or a mobile phone using a little dongle. Or there's other companies that you mentioned, PayPal you mentioned is one of the fintech companies. Again, internet-enabled payments. But there's been about $100 billion invested in the last 4 years in these companies, and a whole range and raft of different specialist companies like Lending Club, Sophie. The list is a long list that are doing amazing things on the internet-enabled financial network, which is radically different to what the banks have been doing.
So what would you say to people like Ken, Kim, and I who are kind of old school? We still go talk to our banker like Kenny does, because I don't have the horsepower to borrow that much money. He speaks their language. Where a lot of people come up to Kenny, Kim, and I, and they say, well, I can't get a loan. And I just don't know what to say to them. But Kenny, you do this all the time, right? You're always talking to your banker about a loan, right? More money, more debt.
Yeah. I think that what Chris is. What I'm excited to hear about is it's more about accessibility. More people with more options everywhere, just like cell phones. So, yeah, I mean, I think it's still going to boil down to qualifications and track record and experience and all that.
So what would you say to us who are kind of old school yet borrowing hundreds of millions?
Well, I think if you just look at what happened in the dot-com boom of the 1990s, if you had shares in Apple, Facebook, Amazon, Google, these companies, when they were starting up, you'd be making millions or billions today on your investments. And that's what people are thinking about FinTech, in that when you look at some of the companies that are coming to market, they will be not just changing banking for the people who are banks, but providing inclusivity for everyone. My favorite FinTech is a company called Ant Financial that's come out of China. When they had their IPO last year, they launched with a $60 billion valuation, which makes them twice the size of Barclays Bank by value. And they're taking over the world. They're coming into the US trying to make an acquisition at the moment of MoneyGram, a partnership with First Data. They're in Europe with Wirecard, Ingenico, and a number of other partnerships. They're actually the majority owner of India's largest payments wallet called Paytm, as well as being in Thailand, South Korea, etc. And so what we're seeing is companies you may never have even heard of becoming the biggest banks on the planet within years.
And it's called Ant, A-N-T?
Yeah.
What is Ant? What is Ant doing?
It's part of Alibaba originally, which is Jack Ma's company, which is the Chinese version of Amazon, but it's bigger. Alibaba's worth more than JP Morgan. So we're talking of huge innovation coming out of internet giants, particularly in China, but also we're seeing massive innovation in India, in Africa, in places that you probably guys wouldn't normally be looking. But these are really investable companies.
Good. So what is Ant doing that Barclays isn't doing?
Well, they started their operations as the equivalent of PayPal for China. So Alibaba was the Amazon. They wanted to offer a payment service, and most Chinese consumers didn't have credit or debit cards. So they gave them this ability to pay using originally an online pay service, but now it's a service in their mobile apps. And then what happened is the service expanded into entertainment. So in fact, Alibaba as a group is now also becoming a little bit like the Hollywood of China. They're investing in movies and entertainment and a broad range of services. And what they've ended up doing is creating what I would call the equivalent of Amazon, Facebook, and PayPal, but all in one app.
Once again, it's Robert Kiyosaki, the Rich Dad Radio Show. Today, our special guest is Chris Skinner, and he's talking about the next future, the biggest boom of all, and it's basically the democratization. Giving the power of banking to all of us via the web or internet and all this. So it could be the biggest opportunity, maybe not for Americans, but for the rest of the world. because, as you know, the Federal Reserve Bank and the U.S. banking system and Goldman Sachs control the world banking system. So this might be the biggest disruptor of all, so please pay attention. Our guest is Chris Skinner and Kim and Ken McElroy.
Chris, I have a question. You're talking about, most people are talking like this is going to evolve over time. This change in the banking is going to evolve. And you're saying it's not an evolution, it's actually a revolution.
Yeah, I mean, there's several reasons why I say that, and the main is that the digitalization of everything is happening. You keep hearing about robots, artificial intelligence, etc., and all these technologies are changing industries fundamentally. I mean, if you look at the shopping malls of America, they're becoming ghost towns because everyone's shopping online at home. And we're now seeing that coming into banking, because banking was built for the physical distribution of paper in a localized network focused upon buildings and humans in branches. But now you can digitally distribute data as money globally through software and servers and algorithms. And that's pretty much what the Bitcoin phenomena has been. I mean, Bitcoin is now rising to a value of almost $2,000 per coin. Just a few years ago, you could have bought them for $2 per coin. And this is because of the word you used, Robert, earlier, the democratization of money. We're seeing the rise of every opportunity to think about things differently in value exchange using the internet. And the banks have to completely re-architect themselves to be internet at their core, or digital at their core, depending on the phraseology. A lot of people say digital core, but I say internet core, with a digital structure that's then questioning where you need buildings and humans. There will be some needed, but I hate to tell you that about 80% of your Main Street branches will disappear over the next decade.
That's going to be a lot of good real estate coming available. Ken, what do you want to say?
Yeah, hey, thanks, Chris. So, Chris, as I was reading some of this fascinating stuff, I kept seeing, and of course I've been reading about blockchain technology. And I was hoping maybe you could
What
talk
technology?
Blockchain technology.
Blockchain.
Yeah,
Blockchain.
which is kind of what is going to enable this. Could you talk a little bit about that?
Yeah, it's quite a complex technical area, but making it really simple, it came out of Bitcoin. And basically, when you buy or sell a Bitcoin and use it, it gets audited on a ledger system, a database. But that database and the recording of the transactions on that database takes place through the internet. And so as long as all of the network connected to the Bitcoin ledger says that that was a proper transaction, then it's recorded and you can trust that it did take place, because the majority of all of the PCs on the network say that's a transaction you can trust. And what's happened is that technology is now spread into another phenomena. And what's happening is these are all digital currencies that are using blockchain to record transactions. Now what's happened is not just recording transactions of monetary exchange, companies and governments are realizing we could use that to record other things, like the sale of houses as a land deed registry, where digitally recording that sale of a house is going to be far more trustworthy than doing it through lots of lawyers with lots of paper documentation.
I love the sound of that.
record deaths on it.
Yeah.
Okay, once again, it's Robert Kiyosaki of the Rich Dad Radio Show. We're talking to Chris Skinner. He's author of Digital Bank and Value Web. For all of you who want to know what the future of banking and money is, this is your program for you. So since I am a Technosaurus Rex, when we come back, I'm going to ask Chris my very simple concern here. Is this thing about hacking. You know, if you can hack anything, like, I guess Putin hacked Trump or something like this, can they hack, blockchain? We'll be right back.
You're listening to the Rich Dad Radio Show with Robert Kiyosaki.
Thanks for tuning in to the Rich Dad Radio Show. If you like what you're hearing, go to iTunes or Android, subscribe to the show, and leave a rating and review to help other financially minded people like you find the Rich Dad Radio Show. Thanks for tuning in and keep on learning.
Every business owner and real estate investor needs asset protection. Entities like LLCs, S, or C Corps are vital to protect yourself and your business. Let Corporate Direct guide you through the process of forming a corporation or LLC. Corporate Direct is owned by Rich Dad advisor Garrett Sutton and is Robert Kiyosaki's choice for corporate formation. Mention Rich Dad and receive $100 off a formation. Call 800-600-1760. That's 800-600-1760. Or visit online at corporatedirect.com. That's corporatedirect.com.
Financial freedom begins with financial education. Now back to Robert Kiyosaki and the Rich Dad Radio Show.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. Once again, you can listen to the Rich Dad Radio program at your time and your schedule through iTunes or Android. And all of our programs are archived at richdadradio.com. Our guest today is Rich Dad advisor Ken McElroy. He's author of ABCs of Real Estate Investing, ABCs of Property Management, an Advanced Guide to Real Estate. And the reason that's important is the reason Kim and I love real estate is because we use debt. I mean, our banker is our partner as well as is a tax man in real estate. And our other guest today is Chris Skinner, and the subject today is the future of banking, really. He is author of Value Web and Digital Bank. And I think for all of you who want to know what's going to happen to the future of money and banking and all these two books and this interview with Chris Skinner are vital because money makes the world go around. And I like what Chris was saying. It's the poorest countries, the third world countries, may leapfrog us now with this new digital money. It's the most important program you can listen to because if you have no access to money, you're poor. That's the biggest thing. Any comments,
Well,
Kim?
I mean, this show is great. We're talking about the future of banking, and we're talking about, is this the end of banks as we know them? And as we went to the break, Chris was saying that 80% of banks will disappear in the next few years, which is pretty shocking. So we are really looking at a revolution, as Chris says, not an evolution, but a revolution in the banking world.
It's like Amazon
I should
taking over
clarify,
banking.
Kim,
Yes.
that I was saying bank branches, not
Bank
necessarily
branches.
the banks, but the bank branches,
Yes.
their physical representation.
And the
Got
big
it.
banks are buying up a lot of these startups. Is that what you're saying?
Yeah, they're partnering with them, they're nurturing them, they're trying to collaborate with them. It may well be that there's going to be some big impact on community banks and credit unions in the US because if people do morph towards digital devices and services, then you kind of wonder what the community bank's role is. But I personally hope the community bank does maintain their community position because that's what they're there for, to be part of the community, part of the community.
So anyway, being a Technosaurus Rex here, and the reason I like gold is kind of hard to hack gold. And my concern with Bitcoin and all this new technology and banking is, if Putin was hacking into the last presidential election, he claims he wasn't. And I know the U.S. is hacking into Russia, although Obama denied that. We all know everybody's hacking everybody. So how vulnerable is the blockchain and PayPal and all this stuff to hacking?
Well, one of the big challenges is that a lot of what the infrastructure that's been built before 2007 was based on centralized systems. And so a really good example is in India. In 2007, they launched a digital identity scheme where since then they've given 1.2 billion people a biometric digital identity. Now, the problem they have is they've done that all on a centralized database. With blockchain, it's decentralized, distributed across the network in the same way that things like Wikipedia are distributed. So you end up with no single point to attack. So it's much harder to actually hack into a decentralized system than a centralized one, because with a centralized one, you just got one point to go to. With something like Bitcoin, you'd have to attack the whole of the internet to hack it. So that it's a much more robust way of actually creating value exchange using blockchain, decentralized, democratized systems.
Right. And that's one of the problems of the military today, whereas in World War II, you could attack Germany, which had an industrial complex. But today, a terrorist could living next door to you with a little cell phone. You can't find them. That's what you mean by decentralized, right?
Yeah, and it's this idea again that if you've got something that's digitalized, it's far easier to track and trace than something that's physical. So the biggest laundered money in the world is the US dollar, because
$100.
there's more US dollars outside America than inside America. And it's used for a lot of drug running and, movements of illicit goods and services. When that's all on a digital structure, you can track and trace and audit most of it. So it's much harder to do terrorist activities on a digital network than on a physical network.
Oh, that's good news. Well, anyway, also you're talking about this is also kind of a power to the people, because this current banking system is too expensive for millions and millions of people, not only in the U.S. but throughout the world. Kenny, you and I, you're heavily invested in this one technology, right, for the unbanked?
Yeah, it's called Pocket Teller, and we're all invested in it. And it's along the lines, as Chris is saying. It's basically just getting people to not be able to carry a lot of cash, or hide their cash or cash their checks, and actually have a system online to be able to access it.
Because every time you go to a bank, it costs them money to bank.
Well, and they can't. They're not even banking. They're paying all these high cost fees to get cash.
Yep, that was actually the whole point of the company was, a lot of these people have, say, $500,000 balances, and for $50, of fees is a lot to some of those folks.
Yep. So Chris, you talk about the three FinTech models, the three major FinTech models that exist, and how it's actually the emerging markets that might have the biggest advantage. Could you explain that?
Yes. One of the other reasons why I say we're going through a revolution is we've never had a position in history where every single person on the planet could connect immediately in real time and trade, transact, and talk. We have that today because everybody on the planet pretty much has a mobile phone. And you may say, oh, not in Africa, Chris. Well, you might be surprised that 89% of Africans have mobile phone subscriptions, and that's almost doubled in the last 5 years. I was just in Pakistan recently, where there's 200 million people, of which only 20 million have bank accounts. But 42 million in the last 3 years have taken out 3G subscriptions on mobile phones, 4G subscriptions on mobile phones. And as soon as you get a mobile phone, it's transformational. So what I see happening right now is that in Europe and America, we actually have some problems because our systems were built on pre-internet infrastructures. A good example is Reuters quoted the other day that 43% of the core systems of American banks are written in COBOL. Oh. And the problem is that's a computer language from the 1970s that people don't understand anymore. The programs are dying. They're old. How can they maintain these old systems?
So once again, we have Chris Skinner. His two books are Digital Bank and Value Web. We're talking about the future of banking. And it's a very, very exciting time, but also a threatening time if you're somebody like me who is, kind of old school yet. So, Chris, what would you say to a Western person like Europe, U.S., and Canada? What should they be watching out for with the future of their banks, and how can they prepare for what's coming?
Well, I think for most of us, banking is not particularly exciting or interesting. It's just a utility function that we need to have to enable us to spend, save, and invest. What you will see is much smarter ways to spend, save, and invest. So a good example for me is eToro, which is a company that came out of Israel that offer social investing, where you can follow people who are investing in companies that you like the look of and copy the rest of their portfolio at the click of a button. It's almost like a Twitter for investing. One of my favorite fintechs in America is a company called Sophie, short for social finance. And their target demographic is what's called Henrys, high earners, not rich yet. And the model is all based around that they give mortgages, loans, credit cards, and the deposit accounts and lending services to people at Harvard, Yale, and Columbus universities, the Ivy Leagues, knowing that these guys in 10 years will be good for the money.
Wow. So let me ask you this. What's your opinion of the more popular type of sourcing of revenue, crowdfunding? What do you think of that?
Oh, I'm a huge fan of crowdfunding. There's different sorts of crowdfunding. There's equity crowdfunding as well as project crowdfunding, and Kickstarter is the one that everyone probably knows, which is for creating projects and getting them funded. And the reason I say that I love crowdfunding is that it's changed a business model completely. And if you're a startup 10 years ago, and you want funding, you had to go to the bank, and the bank would ask you a lot of very hard questions, look at your numbers, your plans, your outline, your product, question everything. And if you were lucky, you might get a loan. And then if you got that loan, a lot of that loan would be going into investing in getting the market to be aware of your idea, your new product. What crowdfunding does, particularly project crowdfunding, is you just put your product on a website like Kickstarter. This is my idea, this is my prototype. And the market, your customers fund you direct. You don't have to go to a bank. You don't have to invest in marketing. It collapses the whole thing into you directly reach your customers straight away before your product's got to market. So I think it's a fantastic new way of doing things.
So they're your investor as well as your customer.
Exactly. Yeah.
That's fantastic.
And then, Chris, what impact is all this digital FinTech going to have? Do you see on like the U.S. Federal Reserve, the European central banks? Will this have a big impact on them as well?
It will do, in that if you've got a decentralized structure, how do central banks work? That's quite a good question, and we haven't actually got the answer to that one yet. It's coming downstream. What I find interesting is at the moment there's a big standoff between the OCC, the Office of the Control of the Currency in the US, and the federal and state level regulators, because at the end of last year, the OCC said they were going to give fintech companies a national bank charter license, which they currently give to credit unions and some of the other smaller institutions, to encourage more competition. And they've actually now been landed with a court case from the federal and state regulators to try and block this. So
that's not
it's
surprising.
quite intriguing. In the UK, we've got 50 new banks that have started up in the past few years. In the US, there's not a single new dip bank. So this is where the argument's coming in, which is, can fintech actually create new banks in the USA? That's what the OCC is trying to encourage. I'll be interested to see how that one pans out.
Once again, it's Robert Kiyosaki, the Rich Dad Radio Show. Our guest today is Chris Skinner, sitting in here with our Rich Dad advisor, Ken McElroy and Kim. And we're talking about the future of banking. Chris is the author of 2 books, Digital Bank, Value Web, and I think they're very important books and worth studying because it's about the future. When we come back, I'm going to ask Chris a real simple story you wrote about how your daughter kind of woke you up to the next generation. They don't even know what a bank is.
You're listening to the Rich Dad Radio Show with Robert Kiyosaki.
Rich Dad Coaching offers a phenomenal variety of services and custom strategies, all aimed at ensuring a secure, comfortable, and rich future for you and your family. Now you can get weekly access to exclusive Rich Dad coaching services through our live stream events. Go to richdad.com and click on the On-Demand banner at the top of the homepage. Great new videos are updated regularly. Get inside knowledge and insights from Robert Kiyosaki himself, Rich Dad coaching professionals, and more. Go to richdad.com and click on the On-Demand banner at the top of the homepage.
This is the Rich Dad Radio Show, the good news and bad news about money. Here's Robert Kiyosaki.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And you can listen to the Rich Dad Radio program on your schedule, anytime, anywhere, on iTunes or Android. And all of our programs are archived at richdadradio.com. And again, the reason we archive them is because we're a financial education company. If you listen to this program one more time, you'll learn 3 times more than you heard today. But more importantly, if you have friends, family, and business associates, re-listen to this program and discuss it, because that's how you'll learn and you'll better see the future. Because our guest today is Chris Skinner, and his website is Chris Skinner Global. And his books are Digital Bank, Strategies to Launch or Become a Digital Bank, and Value Web. And what he's talking about is the future of banking, but also how it's going to impact the world. So for those of you who are listening to us from, let's say, less developed countries in the U.S., this might be the biggest thing you can hear today. Any comments, Kim?
Yes, well, I just want to add that right before we went to break, Robert, you mentioned about the 16-year-old daughter. This is not Chris's daughter, but I just want to tell the story because it really does talk about the new way of thinking of young people today. And it was a 16-year-old daughter, and she went to her dad and said she wanted to open her first bank account. And so, of course, the father says, well, let's go down to the bank and open it together. And she just had this look of shock and disbelief going, why do I need to go to a bank? If I open a PayPal account, I don't ever have to leave the house. Why do I have to go somewhere to open a bank account? And that kind of woke up her father to the whole digital world of banking.
And the same thing goes with cell phones today. They said 51% of homes in America today do not have a hard landline going into the house. Everybody's unhooked from the network there. And then, Kenny, you're working on Pocket Teller and all this because we're into the bank system. But you're looking into the future already, right?
Yeah, of course. I mean, Bill Gates said this 20 years ago, astonishingly, right? He said banking's important, but banks are not. That was very interesting. And this is just part of that technology. It's all basically going to be gone.
So, Chris, you want to talk about...
Yeah, what do you see coming down in 5 to 10 years in the banking world?
Sure. Well, the large banks are already trying to convert themselves into digital structures. Jamie Dimon's shareholder letter from JP Morgan, Jamie Dimon's their chief executive, referenced the fact that they're investing $600 million a year in new innovations in the bank. And this is trying to re-engineer, to change the bank into being a digital bank over the next decade.
Let me just ask about that, because you got this big behemoth bank and they're spending millions upon millions of dollars. What does that make sense when you got these other guys that are coming up with these apps that are doing more with less?
It's a combination of both, Kim, in that what you'll end up with is JP Morgan investing internally in trying to change the bank at the same time as buying and acquiring and collaborating with third-party FinTech companies, which they're already doing, and most banks are doing across the USA and the world. And I kind of, at the end of this, believe that you end up with what I call the open-sourced bank. And open sourcing is a technology structure like that's created a lot of the capabilities we see today with our mobile phones, where it's really easy to stitch together lots of different functions seamlessly yourself. And what you end up with is a bank that becomes really intelligent. It will understand your digital footprint, the way in which you spend, save, and invest, and will actually start to proactively, predictively advise you of where you should be looking to invest next, potentially even doing a lot of this for you. So, for example, I talk about the Internet of Things and the fact that your TV, your car, your refrigerator, etc., will all be online because they've got intelligence. Well, that means that they can trade and transact. Your car can refuel itself. Your fridge can restock itself. Your television can organize all your entertainment.
This is well beyond Siri for banking, isn't it?
Well, yeah, it's kind of. What's the bank that sits behind all those transactions? How is it going to work? And that's what I'm calling the semantic bank, which is going to be in about 10 years. Everything's intelligent, and your financial services structures plugged into all of that, and doing everything for you proactively without you having to think about it.
Well, one more question here was, will Apple Bank be the first new American FinTech bank? And you have doubts about Apple getting into the banking?
Well, we often speculate whether Google, Apple, Facebook, Amazon will open banking services. Facebook, Google, Amazon have all opened payment services, so there is some impact there. But the real reason why I don't think Google, Apple, Facebook, Amazon are going to open full bank services is because it's frowned upon by Washington. It's not viewed as a good thing to have a commercial operation integrated with a financial operation because of the regulatory risk. So I don't think we'll see them becoming full service banks. I think they'll just squeeze bank margin immensely.
And then you say, Chris, with the banks using AI, I mean, their data centers is really what they're
Artificial
becoming.
Intelligence.
Right, so they're data centers. So are there risks? I mean, there's a lot of talk about risks with AI. Are there risks with the banks using AI and collecting all this data and information on everybody?
Again, it would be if it was in a central repository.
If it was central.
What's going to happen is that the banks at the moment are using artificial intelligence for very narrow functions. Like I saw an amazing statistic the other day, which I liked, that JP Morgan is using artificial intelligence for its contracts with its corporate customers and saving hours of legal time. And the statistic was that they processed 360,000 hours of legal contracts in 3 seconds.
Oh,
so we can get rid of a lot of lawyers. That's not a bad thing.
Oh, we love that.
You touch on regulation, and so I'd be interested to know, all these banks seem to be popping up outside of the United States, and this is all moving global, and these banks are obviously going to be bigger than, they're going to rise among bigger than all of these. So what do you think is going to happen on this global regulation platform?
Yeah, that's a really good question because it's actually the biggest challenge we have right now. How do you regulate a global economy when you've got nation states? With Bitcoin, for example, it's viewed as a democratized currency that's regulated by the democracy of the internet rather than of any nation state. And there's a kind of friction between people who believe that that's the way the world should run versus those who think, well, if you have a democratized economy, then potentially people can escape the rules that nation states want, such as money laundering, terrorism, drug running, or other illicit activity.
We're talking to Chris Skinner. His 2 books are Digital Bank and Value Web. His website is Chris Skinner, ChrisSkinner.global. And please look into his books. And we're talking about the future of banking and money. But really, it's about good news, bad news, because that's what the Rich Dad Radio Show is about. So this is my question on the good news and the bad news side. It's a big revenue source for banks is the transfer of money. Is that what you're saying?
Sure, and this is an area that will have big impact. There's a company right now that's using Bitcoin in the background, so you don't see it as a customer, and allowing people to send, for example, money from the US to the Philippines. And the transaction can take place in seconds and cost about $10 for a $1,000 transfer. Historically, you'd be paying $65 or more for that transfer, and it would take days. So
sometimes a month.
This is where we're seeing the biggest impact. That everything's moving to a real-time, low-cost network from this old, expensive paper-based network.
And the other thing, we just heard that India, the guy Modi, the prime minister or president, he just removed their biggest, what do they call them, rupees or whatever they do it with. This like there's a move to take out the $100 bill from America. How does that interface with what you're talking about? Why they want to, if every drug lord is using $100 U.S. bills, and this guy Modi in India took out the biggest cash bill, it almost crashed their economy. Do you know what's going on there?
Yeah, it's quite an extreme action, but what the Indian government has been trying to do for 10 years is to build a digital economy based on digital identity with digital payments that can be made very easily. But unfortunately, at the moment, there's a lot of people who don't have that service.
Isn't that Big Brother?
It depends on how you see it. I personally would say that most of us don't fear Big Brother because we're already allowing Facebook and other services to know exactly what we think and what we do. Google knows more about me than my wife does.
And one other thing, Chris, with the banks, they say that, the banks, they provide these real low-cost products, to get a checking account and things like that. And the reason for that is to attract people to take out the loans where they make their money. And now FinTech companies are coming, and they're just coming right in with those bigger item things like loans and making loans for people. So the banks are like, now what do we do? Where do we make our money? Because that's disappearing now.
Yeah, there's lots of people predicting that banks' margins will be squeezed by at least 50% over the next decade, maybe even more. Some say 80%.
Wow.
Across nearly all their product lines. And this is the reason why, again, the bank branches will be closing, as I mentioned earlier, because the banks have to move to a digital structure that allows them to have the same price margins as these technology companies. I remember my first exposure to FinTech was actually 12 years ago when in the UK a peer-to-peer lending company opened, and they described themselves as an eBay for money, where people who have money can lend to people who need money, and they manage the whole thing through a server with an algorithm. And if you think about that, that takes away all those intermediaries that work in banks as credit risk officers. That's the challenge.
How do you securitize a loan to somebody you don't know through the internet?
Yeah, there's different ways in which these companies operate. So the one I mentioned created their own software analytics, both using everything you can find out publicly through databases like Equifax, which is a credit database, as well as your zip code and your age to work out their risk analytics. Others actually are now, there's one company in Sweden that allows this to happen, and all they need to know is your zip code. That's all they use, because based on your zip code, they know whether you're good for the money.
Wow!
So basically, the web or the artificial intelligence is the person that is the thing that qualifies you as a credit-worthy individual.
Yeah, to a large extent. Although another interesting example is there's a bank in Brazil which is using your Facebook and LinkedIn or other social media profiles to work out whether you're good for the money. And what they say is, if you say that you work for ABC Bank, and yet on LinkedIn I see that you've said that, but you have no connections with anybody in ABC Bank, then I'm not going to give you an account because I don't trust you. So it's getting really interesting how different models are coming into the market of looking at how to do the risk analysis of lending and saving.
How does this impact criminal activity, transactions?
Yeah, I mean, again, there's that famous old saying of the bank robber Willie Sutton, which is, "Why'd you rob banks?" And he said, "Well, that's where the money is." So you obviously people want to rob banks, but now they have to be very clever with technology. Although, again, an interesting thing that I've discovered in my conversations with hackers is that most hackers are not actually that clever with technology. They're clever with people. And what they end up doing is they socially engineer people who work for banks to give them the information they need to be able to rob the bank.
Oh, interesting. Interesting.
So the last question is, which I'm not. Let's say I'm transacting cocaine or all this $100 million worth of cocaine, which I'm not doing. Can that be hidden from the governments?
As soon as something is digital, it can be tracked, audited, and traced. People think that Bitcoin is anonymous. It's not. So if you're using Bitcoin for drugs or to hire people to do assassinations on the Silk Road, etc., which are the sort of things that have happened, that can be tracked and traced. It's difficult, but it's far easier to catch criminal activity that's digital than that's been done physically. Because if I go across a border with a suitcase full of dollar notes, how does anyone know unless they stop my vehicle?
I see. So it's harder to trace cash than a wire or digital money.
Yeah. It's much easier to catch the money when it's physical.
That's fantastic. So we're out of time, but any words of advice for people wanting to know how to prepare for the digital banking system?
Apart from obviously saying read my books and follow my website.
That's good.
That's a good suggestion.
which you very nicely mentioned a few times now, Robert. Thanks very much.
That's my job, is to sell your books.
I just really say, if you think that anything that can be put into software on the internet, it is going to happen. It will happen, yeah. And it hasn't happened much with banking so far because of the regulatory regime. But the reason why FinTech's had so much investment, $100 billion in the last 4 years, is because the venture capitalists, the private equity firms, and the visionaries all believe that this is the time for change. So watch that change. Get involved in it.
Outstanding.
Thank you, Chris.
So, Chris, thank you very much. Once again, it's Chris Skinner. He's the author and expert on financial markets and FinTech. He's chairman of Financial Services Club. His website is chrisskinner.global. His two books are Value Web and Digital Bank. So thank you very much, Chris.
Thank you, Chris. It's been fantastic.
Thanks, Chris.
Great to talk with you, Ken, Kim, and Robert, and good luck with your show. And I feel honored to be a guest. Thank you so much.
It's our honor. Thank you.
So when we come back, going to the next popular part of our program. It's called Ask Robert.
You're listening to the Rich Dad Radio Show with Robert Kiyosaki.
Every business owner and real estate investor needs asset protection. Entities like LLCs, S or C Corps are vital to protect yourself and your business. Let Corporate Direct guide you through the process of forming a corporation or LLC. Corporate Direct is owned by Rich Dad advisor Garrett Sutton and is Robert Kiyosaki's choice for corporate formation. Mention Rich Dad and receive $100 off a formation. Call 800-600-1760. That's 800-600-1760. Or visit online at corporatedirect.com. That's corporatedirect.com.
The key to achieving your dreams is to develop a rich mindset instead of an excuse mindset. Instead of saying, I can't afford that, ask yourself, how can I afford that? It's amazing how a simple shift in thinking can open a world of new ideas and endless possibilities. Let the Rich Dad Company help kickstart your journey to financial freedom. Robert Kiyosaki and the Rich Dad Company have compiled Robert's top secrets to creating a rich mindset, now available in a 10-minute ebook, How to Achieve a Rich Mindset. This offer is available for a limited time only, so get yours today. Get your free ebook, How to Achieve a Rich Mindset. Go to richdad.com and look for the banner. Again, this is available only for a few days, so act fast. Go to richdad.com and look for the How to Achieve a Rich Mindset banner.
Log on to richdadradio.com while you listen. Now back to Robert Kiyosaki.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. Today, fascinating program with Chris Skinner. He's the author of Digital Bank and Value Web. It's the future of banking, but also of money, which is a very important subject. So you can listen to the Rich Dad Radio program anytime, anywhere on iTunes or Android, and all of our programs are archived at richdadradio.com. We archive them so you can listen to this again, and I would strongly suggest listening to this program again, because every time you repeat something, your knowledge or your vision or your ability to understand goes quantum. And if you have friends, family, or business partners who need to understand this, play this program together and discuss it for about an hour, the most important hour you can do during any day. So now we're entering into the most popular part of our program, which is Ask Robert. You can submit your questions to Ask Robert at richdadradio.com. And we thank Ken McElroy, who had to take off because he's got to borrow more money. And it was a fascinating program, huh, Ken?
It was a fascinating program. I mean, we talk about predicting the future, and we don't have to predict the future because we have people like Chris Skinner, who is out there in the world and looking at what this future is going to look like. There's also his books, Value Web and Digital Bank. He also talks a lot about the opportunities and where the opportunities are. And you look on the internet, there's so many opportunities on the internet. And now with banking, even more opportunities. So I recommend his books.
Yeah, I don't got my question is this the explosion of money? You know, if you go digital money, then the amount you can produce is unlimited, infinite. And that's what Kim and I work on all the time is infinite. We never want to use any of our own money in any of our investments. But that takes some practice. So, Melissa, what's the first question for Ask Robert?
Our first question today, Robert, comes from Anthony in Alberta, Canada. Favorite book, Cash Flow Quadrant. My wife and I own 3 single-family home investment properties, each with 20 to 25% equity invested. All 3 have long-term tenants and run positive monthly cash flow. My question is this: if the big crash were to occur in the next year or two and the world economy is thrust into a deep depression, would it be better to own our own investment properties or have more cash on hand? My concern is that if the economy crashes and property prices drop long term and rental prices drop long term, it might not be possible for us to meet our expenses on our rental properties at the same time that our primary incomes would be in jeopardy.
That's a very valid question, but it goes back to the big difference between investing in money, stocks and bonds, and real estate. Real estate is a beautiful investment, but it's hard to get out of. If a crash comes, you can't get out. Whereas stocks and money, you can get out instantaneously. So that's why I always recommend we have Rich Dad Education on real estate and Kenny's books on real estate. Before you buy real estate, you better study a lot, simply because it's hard to exit if you make a mistake. But the other point about real estate is local, and stocks and money are international or global. So whether or not your property succeeds or not depends upon what's going on locally. For example, I was watching this television program about a town where the biggest General Motors plant left. Now, you could have the best location in town, but there's nobody living in it because General Motors left town. So that's why real estate is local and paper assets such as stocks and currency are global, which means that's why I'm glad you listened to the Rich Dad radio program, because those are very valid questions and concerns that Kim and I have and Kenny have as we invest. Remember, stocks, currency, and bonds are liquid. Real estate is illiquid. That's why real estate requires more financial education than stocks, bonds, and mutual funds. Any comments, Ken?
I think that's right on, because that's a question that we're always looking towards the future and where's it going to go, and should we be more in cash, and should we pay off property? But it is local. It's a local question, and you got to make that call yourself. I mean, it's the cash flow game. It's the cash flow board game played in real life. That's really what you're talking about.
If my property crashes, the economy crashes, I just go back to the bank and I renegotiate my loan. You got to have the guts to go and do that stuff. So most people really don't have Trump's guts, and that's why you should stay in mutual funds. So there's a very big adage in real estate, okay? If you owe the bank $100,000, you have a problem. But for Kenny, Kim, and I, we owe the bank hundreds of millions of dollars. If we go, and Trump is probably hundreds of millions, also maybe $1 billion. So as the saying goes, if you owe the bank 100,000, you have problems. But if you owe the bank hundreds of millions of dollars and you can't pay it, bank has a problem. But that's why you've really got to be smart when it comes to real estate. That's why I really recommend stocks, bonds, mutual funds, and ETF and savings for the average guy, because they're not going to study, they're not going to play the game that tough. But it's a very good question. Next question, Melissa.
Our next question from Marcus in Bronx, New York. Favorite book, Cash Flow Quadrant. What is the difference between a landlord and a real estate investor?
They're fairly similar, but an investor may not be a landlord, and a landlord may not be an investor. So a landlord could be a property manager who doesn't invest, and the investor could be somebody who's not a landlord. For example, Kenny is kind of a landlord, and we're his investors, but we don't manage the properties. Is that correct, Kim?
Yeah, and when we started out, and we were starting with single-family homes and six-plex apartment buildings, we were the real estate investor and we were the landlord because we were managing it ourselves.
Which is a good policy because that's how you get smart.
That's how we learned a lot. And now as we get bigger and bigger, we're doing bigger and bigger deals. We're no longer the landlord. We are just the investor.
Yeah, when you have 6,000 units, you have to have a professional landlord like Kenny with a huge organization to manage all those properties.
Which actually is a great point, because as you get, if your goal is to be a professional real estate investor, at some point you're not going to want to be the landlord anymore.
Or you have to start a management company like Kenny.
Yeah.
But the point of view here is this: your education is being both landlord and investor if you're starting out, which goes to the previous question about the beauty about stocks, bonds, mutual funds, ETFs, and cash. You can get out quickly. Real estate, you cannot. That's why being a landlord and an investor and starting small are important. Next question, Melissa.
Our next question comes from Jordan in California. Favorite book, Rich Dad, Poor Dad. It says, hi, Robert. What's your opinion on these, quote, turnkey real estate investing companies?
That's a tough question, because one of the things I really dislike, because when Kim and I first started off, we used to go to a lot of these real estate investment courses. And when you take the course, the novice like we were, it's overwhelming how much you have to learn to be a real estate investor and property manager and bank loan guy. Yeah, there's so much to learn. So we go to these courses, and the presenter teaching the course and go, I realize it's a lot of work, but for those of you who don't want to do all this work, oh, by the way, and they open up their trench coat. I got a couple of properties here. I got a couple of properties here. So a lot of these turnkey things, they're actually fishing expeditions to look for somebody who doesn't want to go through the learning curve of being the investor, property manager, and banker. Right, Kim?
Yeah, I would say for most turnkey real estate companies, I would say you as the investor, your knowledge goes down because they're going to do all the work. The fees are going to go up, and your cash flow is going to go down.
You're going to split your profit. They're going to be a partner.
Yep.
So I know it's done all over the world. People do it all the time. I'd be very careful, and I'd wait 7 or 8 days before I did anything with these guys. If somebody says, since it's so difficult to do real estate, let me do it for you, I'd run personally. Because when I did my first real estate course back in 1973, my instructor said it very important to me. He says, your education begins the day you leave the course, not what you learn today. And so if you're not willing to learn, which is the Rich Dad's about, then probably a turnkey would be important, but your learning falls precipitously, so is your profit and your earnings. So it really depends upon you. I am glad, and Kim is glad, and Donald Trump's glad, and Kenny's glad. We went through that learning curve of being the investor, the property manager, the bank negotiator, the seller, the buyer, all that stuff, because that's priceless. But most of these turnkey guys are saying, let me do it for you. If you're going to do that, buy one of those stupid mutual funds. So thank you again for your questions. These are my opinions. They may not be yours, but my job is to give you my point of view and our point of view and Kenny's points of view, as well as Chris Skinner's points of view today. So you can submit your questions to AskRobert@richdadradio.com. And thank you for investing time into your own personal financial education. Thank you.
Every business owner and real estate investor needs asset protection. Entities like LLCs, S, or C Corps are vital to protect yourself and your business. Let Corporate Direct guide you through the process of forming a corporation or LLC. Corporate Direct is owned by Rich Dad advisor Garrett Sutton and is Robert Kiyosaki's choice for corporate formation. Mention Rich Dad and receive $100 off a formation. Call 800-600-1760. That's 800-600-1760. Or visit online at corporatedirect.com. That's corporatedirect.com.